guess as we open up the panel, I'll ask all of you, when you read these studies and you look at some of these stats, how do stats like these really shape the way in which you guys as product owners and leaders, as well as your organizations, strategize for the future of payments, as well as the types of products that you guys will be delivering to retailers? So who would we start with?
I can kick it off.
Sure.
Oh, go for it, Patrick.
Yeah, thanks. Here's what I would say. And what COVID did in the last 5 months, the entire payment industry has been trying to do for 10 years. That's my honest answer. Like, digital is booming. And when I say digital, I don't only mean e-com or shopping through a website. It's shopping through an app, or even brick and click. So ordering online and picking up at the store. So it has done, like, and we've been trying to push the industry that way for so long, but it wasn't moving as fast as we wanted. So when I look at the roadmap for Moneris as an example with our digital solution, it didn't change our roadmap. What it did is expedited a lot of products. It got us to move these products faster into the market to support this digital e-commerce, the push for digital e-commerce. And again, that doesn't only include e-com. It also, even in face-to-face, you think about what's happening right now. Contactless is on the rise, and using digital wallets to make payments in a face-to-face environment, or when you're picking off the side of the curb.
Yes, Sukmani, I think you wanted to jump in as well.
Yeah, I think I agree with Patrick. In fact, one quote that comes to mind when, given what Patrick described and Meryl, what you just said, Scott Galloway from NYU University said, "Other crises reshape the future. COVID-19 is just making the future happen faster." And I think it very beautifully summarizes what we're seeing. We couldn't have predicted the pandemic, but we could have predicted what came next. We were even years before talking about digital and how that's growing. E-commerce already was growing 2-3 times faster than physical commerce. All of that has just been accelerated. And like what Patrick said, it moved the industry in 6 months, what the industry was trying to do for years, right? So I know you gave the example of contactless, Patrick. Just even on that, when MasterCard as the first network to announce the increase to $250 in contactless limit, we saw the market shift in 16 weeks by the same amount that it would have taken 2 years for the market to move. So it's just this change, the pace of change is what is different now. The strategies are the same, and we're just doubling down on them.
Absolutely. And if I can add, I think we've seen this across different demographics. Like previously, there used to be a certain segment where it's the millennials, the early adopters, or Gen Z or Gen X that used to go with the digital payment and digital vehicles of purchase. What we've seen is even the older demographics are suddenly being forced into it. Once they're forced into it and they realize how convenient it makes them, like simple things, right? If you even take it outside payments, we've had check deposit in the industry for years now. And despite that, there are customers of ours who will come into the branch and actually deposit the check at a teller. Some will use ATM, but now suddenly they discover the beauty of depositing it on the phone. And same thing with ordering online, sending e-transfers instead of cash payments, like even paying someone for lunch, requesting money. So all those things, even the older demographics we've seen increasingly used. And so agree with the previous comments. It's like we were waiting almost for this digital adoption to happen. And unfortunately, it was a pandemic like this that made it happen. But I think we are trying to make the most of it. And from a retailer perspective, it's really important that they understand where the demographics is shifting. They're very good about understanding customer preferences. So now this is a payment preference that they have to understand and say, okay, how do we support this? Because this is here to stay. Once someone gets a taste of digital and how convenient it is, it's difficult to go back. I always joke that if it's not available on Amazon, it doesn't come to our house. Now it's so true that almost on a daily basis, if one day the Amazon truck or the delivery agent doesn't stop by, we wonder like, hey, did we forget something today? I know it's not good for the environment, but unfortunately, that's the environment we are living in.
Yeah, the only thing I'd add would be I think we're also seeing not just the who from a demographic and the sort of channel as a shift, but it's also the types of payments. And I think now, take a think at any online or e-commerce infrastructure or store that you've been to as a consumer in the last 3 months that is selling things, over a couple $100. Have you not seen this massive migration as well to, pay in installments or sort of point of sale lending? And so I think what we're really starting to see is this shift in consumer desire and then in merchant and retailer fulfillment as an optionality to say, we're going to find you more ways to get done what we used to do in other channels. And so I think it's the expansion of payment types that's also been really interesting to see.
Yeah, I totally agree. I mean, I think a perfect example of that is if we look at Bed Bath and Beyond, which even though it's a big retailer, was doing really bad online before, and they're one of the few companies that today, if you look at how they're performing in the COVID, because they've adopted some of those alternative, pay now, pick up at store, pay in store methods. It's really reshaped their sort of mobile experience. We do know that the holiday season is picking up, and that's when most companies who are already set up for online are they've adopted, they know how they're going to handle this. But for many smaller retailers who are now having to pivot, I guess, what advice can you give them as they prepare for the holiday season?
So is that for me, Mira?
Yeah, sure. It's open to anybody.
Okay. So look, at the end of the day, to all businesses, the first advice that I would give, and a lot of businesses do not have a digital presence. Businesses have to start establishing digital presence, and a lot of them did. In fact, they're starting to communicate with their customers through these channels, and the trend is continuing that way. The other thing that I recommend is invest in technology and invest in digital solutions, whether again it's online and or face-to-face. And I keep going back to face-to-face. It's not because maybe not a lot of people, again, based on the numbers that you were giving, a lot of people are going to go out and shop in face-to-face, but there will still be a lot of demand for shop online and pick up at the store or on the curbside. So invest in technology that allows you to support those type of scenarios, whether it's wireless terminals, accepting contactless payments. And again, for sure, on top of that, try to have an online presence if you have the capability. Moneris just launched an awesome product called Moneris Online that allows merchants in a very quick manner to design a website using artificial intelligence, load their items online and start selling online in a very secure way with fraud tools built around that.
I would totally agree, Patrick. And a couple of things that I would add to that is don't shy away from partnerships. You don't need to do all this on your own. There are good partners out there that can help accelerate this in your journey. And so a simple example I'll give is in just this few months, TD has helped some of the small business owners, where small business owners were finding it difficult as phase 2 and phase 3 opened up. They were finding it difficult to get people into their stores from a traffic perspective. So we have this product called TD For Me. It's a service on any mobile app, TD Canada mobile app. And we actually help some of our small businesses to actually advertise and send coupons to our mobile customers that they wanted to offer in the areas that they were. And this brought traffic into their shops. So similarly, there are other stakeholders that can easily help you take your business to the next level, because sometimes that steep curve that people feel like, oh, I have never transacted digitally. I don't use Square. I don't know what Moneris online system is. I just know how to take cash. It's that hump that people need to get over. So I think it's look for partnerships.
As we're talking about sort of, e-commerce, we know that before the pandemic, digital wallets really accounted for 42% of that shopping experience. And studies are showing that digital wallets are really going to sort of be the most utilized payment method going into between now and 2023. So I guess, Patrick, the question for you, and feel free, panelists, to jump in where you want. What advice can you give to any of the retailers that are out there today that are considering building their own digital wallet?
What I would say is, and so this is a touchy subject. If you ask me from an nurse, and I'm pretty sure Souk will agree with this, I don't recommend merchants building their own digital wallet. What merchants should do is build their own digital presence. We do have very strong and powerful digital wallets that are available in the market. We have Apple Wallet, we have Google Wallet, and the brands are coming with a very strong wallet that is going to be in the market very soon, and Moneris is going to be very proud to support it. So we have the wallets. The wallets exist, and the wallets are an awesome tool that allows merchants to support a seamless checkout experience or a seamless shopping experience altogether. The wallets are there. What the merchants need to do is they need to build their own website and shopping experience to support these digital wallets. And again, if I go back to the Moneris online solution that we launched a few months back, it does come with that support built in. So merchants don't have to do anything. They just have to say, I want to accept these digital wallets. So you can accept credit, you can accept debit online, but it's only a pickup box, and you can start accepting these digital wallets. And the benefit of these wallets is how easy and how seamless they make the experience.
I would agree with Patrick. I think merchants should definitely keep consumer choice top of mind. In fact, we did some studies early in August, and we found that, you know, this group here probably thinks about payments way more than cardholders ever did. But now, in this moment of time, payment methods, how payment is being accepted has suddenly risen to the top, and it's beating out other topics like how pickup is happening and so on. So I think, like Patrick said, merchants should focus on building out their digital presence. There's already enough functionality out there in terms of wallets. They should just focus on enabling that for their websites, so that if their customers want to pay through that, or they want to pay through what Corby said, you know, alternate financing methods, it's buy now, pay later, or installments and things like that. I think merchants should just making sure that they're offering all of these options to their cardholders.
Okay. All right, so we'll move on to Vopal, and we'll just chat a little bit about financial inclusion. As we mentioned, we see a lot of, you know, the trend is going online. I think this has been happening for a long time with Canadian consumers. Canadians are we've adopted easily to online payments, more so than, I guess, our neighbors down south. But we're seeing this increase, especially with 53% of Canadians saying that they're utilizing card and mobile payments more so now than they did prior to the pandemic. So when we look at behaviors like that, it makes you think about what happens with, you know, that unbanked population, what happens to folks who utilize cash a lot. And so I'll open it up with you, Vopal, but it's again open to the other panelists. But when we think about larger financial institutions like TD, it's one of the biggest banks in Canada, how are you guys planning to then address sort of financial inclusion as you're sort of working on your roadmaps for the future?
Right. No, absolutely. I think this is a problem that the banking industry has been mulling on for ages now, which is how do you, and I include financial inclusion to include things like not people who do not have the accounts, who do not have the cards, who only use cash, but also people who have these vehicles, but do not know how to make the best use of them, and sometimes lose track. And this is where the problem with credit, the too much usage of credit and then getting into debt, etc., comes in. So for the first segment, definitely, it's a lot about education, literacy, trying to work with governments and other providers to figure out how do you actually get them into the system. And things such as going digital do help. I know we will talk probably a little bit about digital currencies and how that could potentially be a pathway into that. So I won't get into that here. But then to the second segment, as to people who actually have some of this, but do not use them very well and are actually going into a big problem because of credit debt, etc. I think what we have done is how do we improve our education? How do we partner again with the right fintechs? So for example, we have a product called TD MySpend that actually educates customers and informs them about how much they're spending, whether they're meeting their savings goal. You can actually set up limits for them. You can save for a vacation, or you can save for an education. And then we partner with other fintechs such as TD Clari with Kasisto to actually get them information at their fingertips because one of the other things we found is people are shy about asking for help. So how do you actually give them a safe environment where I could go into TD Clary and just say, hey, how much did I spend on coffee? Because TD Spend just warned me that I have been drinking way too much coffee. And so things like that. There's a simple example, but how do you give the power back to the consumers so you actually educate them and help them take control of their lives?
Yeah, if I can just add, like I think it's a really interesting concept with regards to financial education and literacy and creating baseline. The two things we need to consider: one, from a financial services organization pushing capabilities, you also have to remember that not everybody will have the same access, devices, technology, knowledge. So the knowledge we can handle, but how do you get the knowledge in the hands of people who don't necessarily have the same level of internet connectivity, always on, data plans, phones in their hand that are modern enough to run, fairly high, high processing applications on the device itself. So there's an inequality, and what I think we're seeing from the big tech players, like what's happening now with the Google and Facebook, is they're almost getting in the face of the financial services organizations and saying, hey, we're going to start to try and mitigate equality from a marketing and targeting perspective, right? So now, as we all know, in the financial services industry, you can't use certain data elements like geography or FSA or postal code. You can't use things that would otherwise maybe be considered at risk of being determined to be, a human rights violation or more of a financial socioeconomic issue. And so if you take that mentality and you say, well, if Google is going to prevent you from targeting a loan or a lending vehicle that might actually help that person, like, how does that impact on your operational business? Like, what does that mean in terms of how you build your own AI logic to do things like risk adjudication models? Like, there's so much downstream impact. One of the most interesting things, at CIBC we ran when we looked at mortgage adjudication models, and we said, whoops, nobody ever built in the fact that 95% of historical parental leaves were taken by women, and when they applied for a mortgage within a year of having a baby, they're going to get rejected because their income looks like crap. And I use that as a really simple example. This goes deeper than simply the availability of payment vehicles. Like, this is like very fundamental to the way in which we operate our businesses.
That's a really good point. And I guess, as we're looking at reshaping, I think I mentioned this in another panel I was in, when we talk about sort of financial inclusion, is even just understanding, to your point, like the consumer behavior, right? We're seeing that now this come up where, for example, people can now build credit based off of their rent payments, because we're finding that the traditional way of us collecting data on consumers is sometimes working against the financial institutions in identifying really great customers. So, Corby, while we're chatting about also some of these tech giants like Google, we know that companies like Shopify and Amazon, they're utilizing transaction data from their merchants in order to be able to provide loans to these small businesses. I guess it would be interesting to hear from you, and probably yourself as well, Patrick, on we're in a point now where eventually it's going to get a little tough for these small businesses to be able to go to a traditional financial institution in order to probably get access to credit. Do you see the future of lending practices changing in the digital era? And if so, how do you see it changing? Or where do you think it could be improved upon?
Yeah, the most, well, to me, I think it sounds like the most obvious thing, but today many of us make decisions on very small numbers of data points, right? Who are you? Where do you live? Can you prove who you are? Okay, awesome. We've passed the AML check. And then we go down a level and we say, okay, and like, how good or bad of a consumer or business have you been in the past? So we check your credit score as an example.
Yeah.
And then we have a whole bunch of modeling that takes like, those 7, 8, 12, 15 data points, and we come up with a decision. But who's to say that 4 years ago, you got into some hot water, you maybe didn't know, because we hadn't educated you yet, how to get yourself out from under the rug. And you got a great job, you've got your expenses under control, you're living a very normal middle-class Canadian life, but the model still says you kind of suck because your credit score is not great. Well, what if you had the ability as an FI, as a lender, as a decision maker, to tap in with permission to the daily transactions of that consumer or that business and say, wow, they have a good income because every second Tuesday I see a paycheck. They have insurance, they're smart, they're making good decisions. Like, I can see the inflows and outflows. Yeah, the credit rating, okay, I'll ask them. Oh yeah, that was 6 years ago. You know what, I've never done anything about it because I don't want to wait on hold for 4 hours with Equifax. it doesn't mean they're a bad customer. It means that they were. And so I think access to transactional information can be so incredibly insightful as to the true potential of a customer, not the historical potential of a customer. So I think that's one way in which I think we need to think about the value, again, with permission that the customer opts in and is fully transparent as to what you're going to do with that data and how you're going to destroy it when you're done with it.
So I don't want to repeat everything that Corby stated, because I agree with all of it 100%. And today at Moneris, we do have products that provide what we call it is merchant cash advance, is where the merchant can get a loan based on their transactional processing. But I think, well, not I think, I'm certain that these practices are going to become more and more popular as we go into the future, especially in the environment that we're in and how businesses are struggling. And again, I will couple that with the installment payments, again, that was mentioned before. Even customers or consumers are looking for installment payments where they can buy now and pay later with comfortable installments. And that helps a lot of consumers that fall into, hey, they don't have a good record or a good credit card, or they don't want to use their credit card because they use it. They don't want to lose the open to buy on the credit card. So again, I'm not going to repeat everything that Corby said, but I agree with them. And there are products like that, but I believe that we're going to see more and more of these products in the market.
And we see a lot of, especially what Corby said with the, permission to have access to data. A lot of that conversation goes back to open banking, right? Is that will help to facilitate better products, better adjudication, better access and options for consumers. And we see sort of that being the big conversation right now. And I guess, Vipul, I know I haven't sent you this question before, but I guess maybe you want to chat a little bit about from TD's perspective, because TD has a lot of patents out for the payments area, which is really exciting and fun. I guess, just talking about, again, are there any ways that you can talk to us about how TD may be thinking about reshaping the way that it's going to be offering lending or payment options once it's able to sort of participate in some form of open banking, as we're still getting on that journey to getting there?
Absolutely. I'll start with one personal opinion about open banking. I really like the concept that is used in Australia and a couple of other jurisdictions where it's more open data, because I feel open banking in itself is not going to solve world hunger, and not that open data is going to. But then data needs to be open, because to the points that Corby and others were making, you need a lot of data with the AI models that we are using to actually find a different way of educating people, to a different way of mitigating risk. Because right now, the only data we have is like, hey, what's your credit score? What's your address? You live in Oakville? Great, here's your loan. But we need a lot more, even the shopping behavior. What sites are you going to? And big tech has that data. And now in this guise of open banking, they are trying to get access to it. So I'll start with that ramble, which is, hey, it has to be about open data, not open banking only. Now, how TD thinks about this is absolutely, like, we have actually been in the forefront of talking about open banking as it's used in North America. In the US, in fact, we've actually launched APIs that will enable some of our partners to access this. But I think we are also being very conservative in the sense that keep the APIs ready, participate in forums where we can drive direction in how this data is going to be used and destroyed, which is very important. It cannot fall in the hands of the wrong people. And then again, I think we need to start small, which is start with partners, third parties that are trusted, and then make it open to all. I think in Europe and others, we are seeing that it's open banking is open and anybody can start now using it. I think we have a more conservative view on how we actually approach open banking. And we do believe that it's here to stay, and we are actually going to participate in it, but in the right way.
Great. So as we're talking about data, and this is a question that I'll pose to Sukhmani and then Patrick, we know that TransUnion has mentioned that 22% of Americans have been exposed to some form of digital fraud ever since the onset of this pandemic. I guess, what type of fraud trends are you seeing here in Canada as we're, utilizing more digital payments? And I guess, how can retailers set themselves up, to ensure that they're protecting their consumers as they adopt digital payments more and more.
For sure, Meryl. And in fact, even in chat, I see there's a question around, is data security keeping up with the demand? And to Whipple's point around opening up data, I think obviously it's top of mind for everyone, not just on the retail side, but even on the bank side. So I think when the pandemic started, we all saw the headlines of COVID-related fraud, whether it was phishing or spear phishing. People were falling for it. Governments had to issue advisory saying, this is all scam, this is not what it is. So that was very visible and in the news, so we all heard about it. But I'll share two things that we saw that were maybe not as visible coming from our data. One thing that we saw was, so there are two types of account takeover attacks. There was lots and lots over the past few months. One is a basic attack where you have, bots trying to stuff credentials, and it's pretty basic attacks, high volume. And these can be easily detected and identified and mitigated. But then there are the sophisticated kinds of attacks where someone is emulating human behavior. These ones are not as high in volume, but it is much harder to catch these because they look like a genuine human person trying to interact with the system. And the troubling thing is that during this pandemic period, 96% of attacks on financial institutions in particular were of the sophisticated kind, which just shows you that the fraudsters have understood that more and more people will be accessing these services online, and they are making these their entry points into the ecosystem. And on the flip side, on the merchant side, all of us are trying new services that we never tried before. So good users like us are creating accounts on new food delivery or on-demand services. So are fraudsters. We saw through our data, 1 in every 2 accounts created was a high-risk account. So it was something shady going on essentially. And a lot of these shady accounts are then ultimately used for testing stolen credentials. So whether they could be card credentials also. So these are the kind of troubling things that we are seeing. I mean, it's to be expected as things move digital security and threat atmosphere has to change. The solve for it, because the second part of your question is what can retailers do? What can our audience take away? One thing that I would say is there are tools out there that can very easily help you understand if you've exposed something online that you weren't supposed to. If you've left any backdoors, if you've left any holes that fraudsters or hackers can exploit. And in fact, it's very important for small businesses who are coming online in a rush to pay attention to these things because that they probably have lesser comfort with technology and lesser sophisticated technology stacks. And for that reason, MasterCard actually made our tool, cybersecurity assessment tool called Risk Recon, available for free for small businesses for the rest of we launched it in June, July, and it's been free for the rest of the year for small businesses to take advantage of so that they can understand what their security posture is and if they've exposed anything that they didn't mean to. So I'll stop there because I feel like we're almost close to time.
That's all right. I guess, Patrick, did you want to add anything to that from, I guess, the, Monero standpoint?
Yeah, just quickly to speak about the type of fraud we're seeing. Obviously, what we see on our end is online fraud, consumers or trying to fraud the merchant for saying, "Oh, I didn't purchase these goods. This wasn't I didn't perform this transaction." There's a lot of that has been happening, and it increased a little bit with COVID. In general, the Canadian merchants were a little bit neutral or passive toward investing in fraud tools because they always thought this is not going to happen to me. And then when it happens, that's when they feel the burden of what happened. So there are, again, to Suk's point, there's a lot of tools, and at Moneris we bake a lot of these fraud tools as part of our general offering to help merchants with online fraud, whether it's whatever is provided by the brand, such as address verification, the 3-digit code that appears on the back of the card. And I'm happy to announce that Moneris recently we recently certified for our 3D Secure 2.0 program, which is an online fraud detection product that's supported by all the brands. And if you compare it to the 1.0 version, this one is going to be a lot more seamless and easier for customers to use, and it will be a lot more frictionless. I always like to talk about a little bit about face-to-face or the environment when you're using a plastic card or a digital wallet at a merchant. I do encourage all merchants to accept contactless, because, and I also see a question in the question area. In fact, for all credit products right now, the limit is up to $250. It used to be $100. Right now it's $250. Now, of course, it depends on your issuer, but in general, the limit is $250 for Visa, MasterCard, Amex, and the rest of the credit products. And the beauty of that is you as a merchant, you're protected from fraud if somebody claims it was a fraudulent transaction, but also the consumer or the cardholder is.
Okay.
And congrats on the 3DS certification, Patrick. I think that's a great tool. Everyone, like, if you haven't heard about it, if you're a merchant and processing online transactions, I would recommend definitely look that up.
Perfect. So we're just going to answer a couple of the questions that have come in. I think we've answered two of them in our previous questions, but one of the questions is from Ifra. He wants to know that before COVID, many developing countries were more on the cutting edge when it came to mobile payments, such as M-Pesa in Kenya and Zaad in Somalia. Are we seeing the developed world catch up now? So I guess if you guys want to chat about what do you see happening in the developing nations that excites you?
It's a very interesting question. I think one of the reasons you saw a lot more movement in Asian market or in African markets around this is because they had certain unique challenges and market dynamics which helped with the emergence of these solutions. North America or the Western world fairly developed from an acceptance standpoint. There's hardly, very limited merchants that you go to that don't accept card payments, whether it's credit or debit. So very mature acceptance footprint. The convenience of just being able to pull out a card from your wallet and just tap it and walk out with your purchase is hard to beat. You don't need to overcomplicate things. So in Canada in particular, we're seeing a very strong preference for cards. When we compare it to mobile wallets. Mobile wallets are definitely growing. There's an undercurrent, but think about your current experience when you walk into a store. If you're wearing a mask or if you're wearing gloves, the authentication piece sometimes is not as seamless, but cards, just tap it and it kind of works.
I would like to comment. Go ahead, Lee. Go ahead.
Oh, thanks. So if I could add, there are two things that are driving this, right? Yes, we are going to catch up. So one of them is around this digitization that we talked about, the rapid adoption of digital products, and then even all generations across, they are trying to now get familiar with e-transfer or contactless payments, etc. So that we've touched enough. The second thing that's happening is around the payments modernization journey. So there are about 173 countries or so that are actually have either gone through a payments modernization or actually are in the process of going through. And what I mean by that very quickly is what happened about 10 years back in the UK, and it's in fact in its second wave of modernization, which is completely uprooting how payments are processed within the ecosystem. What that does, and if I could take an example of some of the better ones out there, like India, NPI, it's a developing country, it's known as a gold standard. The government is setting standards from the top, some of the best-in-class standards to say how do payments actually get exchanged, right from the top level, which is these are billions and trillions of dollars, to micro payments, which is a 1 cent, 10 cent payment, etc. So once that happens and the ecosystem is created, you then see innovation happening. Big techs like Google, other telecom players, banks, etc. in India are setting up QR code payments, which QR code for about 6 years, 10 years back when I was in the space of mobile payments with Deloitte, people would have thought like, hey, that's going nowhere, it's all NFC. Now suddenly it's turned over because of this point where there were no terminals in India. Like the local grocery owner, there's like a pawn shop that is a picture child of QR code payments. They didn't know what a terminal was, but now they have a phone and they can print out a QR code and that's it. Every device now is able to pay this merchant and that accelerates the payments. So when these technologies are really taking shape in developing world, we now have a foundation in the developed world where we have the terminals, we have contactless terminals, payments modernization is actually happening. And if you put the two together, it's not immediate. I think in Canada, it will take at least another couple of years with the modernization journey, but this will really accelerate our path into the new world.
Okay.
Yeah, so my comment was the same. So basically, I would summarize it. They skipped a couple of steps that we have to, like, we cannot skip because we have these established infrastructures. They didn't have to go through these things that already exist.
So we have a question in from the audience, which is about cryptocurrencies, and it goes back to one of the ones we have not answered yet. So we know that last week we saw the Bank of Canada deputy stating that the pandemic is really causing a lot of central banks to move faster on their digital currency plans, which had been stalled for a while. You know, this would act as this like cash or streamlined transactions by avoiding a need to use payment and cards for online purchases. I guess I'll start with Sukhmani, but it's open to the rest of the panelists. What are your thoughts on private cryptocurrencies, and what regulation would you like to see central banks, you know, put out there in order to address them?
Yeah, so it's an interesting question. So I think a lot of central banks globally, even before the pandemic, had been looking and exploring what does it mean to issue digitized currency. And I think because of the pandemic, obviously, you know, just like accelerated focus on everything digital, this focus is also accelerated, hence the Bank of Canada announcement. We at MasterCard actually look at this positively and are supportive of central banks issued digital currencies. And in fact, just in September, we made an announcement where we made a testing platform available to any central banks, financial institutions, and merchants that want to test this out on how the issuance would work, how acceptance would work, and things of that nature. Of course, the underlying assumption is that these centralized currencies are bank-backed. They are in line with regulation. They are equivalent to the fiat currency of the country. So this is very, you know, it has to be run by the central bank if you want to go into this territory, unlike, you know, some of the more decentralized, privately run blockchain cryptocurrencies.
Yeah, so my comment on this is, again, when in the question you say private cryptocurrencies, I'm assuming you're talking about the ones that are not backed by banks. 3 or 4 years ago, when we were in the market, every single merchant and business wanted to know what's happening and they wanted to enable this payment. Right now, we hear less and less about it because the volatility and a lot of the issues that happened around these currencies. Again, what I would say is when we will see a rise in digital currency, and until it's defined by the central banks and the banks, I would still say I'm not sure what it means when we talk about it. It's not really clear. So it has to be defined, the regulations have to be published, and we have to have standards around that. Until then, I'm not pretty sure that we're going to see any strong, we'll see some pockets, but it's not going to be strongly in the market until these regulations and the big banks come behind it. And when I say big banks, I mean central banks.
Corby, Vipul, anything to add with regards to?
No, I'm good.
No, I'm good on cryptocurrencies.
Awesome.
Enough said.
Fantastic. All right, so we don't have any more questions from the audience. I guess we're almost at time. So I guess what I'll do is I'll just, you know, we'll do a round for each one of you. If there's one piece of advice that you can give to retailers or product owners that are watching right now as they prepare again for, you know, the post-pandemic landscape, what is that, you know, one takeaway or piece of advice that you can give them?
Yeah, I'll just jump in and probably say, you know, 2 things: optionality. So make sure you're providing the most options for the consumer to simply choose. Don't try and force them down a single path. And tied into a lot of the conversation prior around, you know, fraud and protection, I would say, yeah, the technology is important, but don't forget, you also have to manage the customer experience side of it. So what are you going to do and how are you going to handle it when it does happen? Because it will happen. And you're talking to the guy who took over Simply Financial the day before the breach. So, you know, I'm just saying, like, yes, the tech, the InfoSec, the monitoring, et cetera, you can buy as many servers as you want. It will happen. And the real question is, how are you prepared as an organization to handle the customer base and the impact and the volume of customer service experience and so on?
Fantastic. Paul?
Yeah, if I add something separate from what Corby just said, I would say think about data and think about, as real-time payments and others are coming into your environment, how do you get your data sorted? Think about B2B payments. How can you actually make your life easier? A simple example being when RTP actually comes real-time payments and B2B payments, you could actually make a request for payment, send the invoice along, and the payment can become a part of the actual transaction that has the invoice as well. So think about reconciliation. Your life is going to get much easier, but it won't be easier overnight. You need to start preparing now, making, again, the right partnerships with the right vendors. Who's providing your software for your merchant terminals? Who are you partnering with from, if you're a bigger vendor, who's your provider, Oracle, SAP, SAP, etc. So think about that and get ready for the next generation of payments.
Mani? Oh, we can't hear you.
Agree. Sorry about that. Agreed with whatever Corby and Vipul just said. The only thing that I would add is, as you know, if you're a business that is kind of rushed to come online and serve your customers during this time, one thing that you may not have had time to sit down and look at yet is all your third-party interactions that are happening and the partners that you're working with. And it only takes the weakest link in the chain to impact the whole ecosystem. So as much as you think about your posture around experience and security, you also will have to pay attention to whoever else you're interacting with in your customer journey. So I think I'll leave it there.
Perfect. And Patrick?
Yeah, I would agree with everyone, but I will still re-emphasize to retailers is don't fall into technical debt, because if you fall into technical debt, it's going to become very, very difficult to come out of it, and it's going to become very, very difficult to react when a transformation is required. And this transformation could be something with your customer experience, and you don't want to be behind.
Fantastic. Well, thank you, panelists. This is a very insightful conversation. For the audience that's watching today, we hope you enjoyed today's session. There will be a break until about 3:30, at which time the next session will start, Brands and Social Movements, moderated by Heidi Rougier, President of MapPR. So please join us back on the Zoom link at 3:30. Thank you, everyone. Have a great day and be safe.
Thank you.
Thank you, everyone.
Right.